All right, this was an absolutely stunning day for the U.S. stock market because a short time after the open, the S&P 500 was up almost 2%. Vibes were high, tech stocks were often flying, mostly because NVIDIA and Jensen Huang basically shut down fears that the AI boom had been fading. That's what they reported in earnings yesterday. But that didn't last very long because if you look this morning, after the open at the minute-by-minute chart of NVIDIA, right around 10:38 a.m., you could see the stock started to sell really hard. And that one reversal kind of flipped the entire narrative on Wall Street because suddenly investors seemed to care again about overvaluation and a top-heavy tech market, and it basically dragged down everything with it. By the time we closed, the S&P was down 1.5, the Dow was down 0.8, the small caps were down 1.8, and the NASDAQ fell more than 2% on the day. And that's an absolutely brutal reversal that saw peak to trough, the S&P 500 swing 3.6%. That's absolutely wild. And then on top of that, we had this really weird jobs report that kind of had something in it for everyone, right? If you think the economy is really strong, you point to 119,000 new jobs added, and you say that's great. If your argument right now is that the U.S. economy is weak, you've got 4.4% unemployment to point to in the very same report, so kind of something in there for everyone. But the real takeaway, I think, is that the report and a few other things that have happened recently have kind of lowered the odds of an interest rate cut for the Fed in December. And when rate cuts disappear, you usually see these high growth, high valuation tech names, the mega cap names usually get hit first. And as they move, the broader market usually moves with them because they're so consolidated. So today to me wasn't just about volatility, though it was a very volatile day. This was really a narrative shift because this has been an absolutely monster year for AI stocks. And what we're seeing as of late is traders take some profits. They're rotating into defensive names like healthcare, which are up 18% since August. And whenever interest rate cuts get questioned, prices get humbled very quickly, as we saw